What's up, Charlie? Uh, good. I missed my mark. I should have taken profits. I'm in two minis on this Big's bottom here. It was up $100. It's up $60 now. Looking at 75, $80 here. I'm just trying to scrape a little bit something off this. 71. I'm just gonna take it. I just don't feel good about it. Missed my first mark there. Let's see here. Two minis. Got a little bit of space here still. If we can get back up to that 50% extension, but it's just not holding right. I'm just going to take it. I was really looking for it to come right back into 429, 420s at least. Good job on locking out those contracts with the minis today. Good. The Big's bottom. Okay, so that's why I wanted to jump on, just to kind of show. So after we kind of bottomed out here, for my time, 8:15 Pacific Standard Time, it was. If we look at the 5-minute candle, we're gonna not including the candle that we're currently on, but the previous 1, 2, 3. Right? Look back 3 candles, 4 candles. That little like doji candle where we kind of, have a little wick on the bottom, we have a little wick on the top. The next candle printed green at 8:20 in the morning. I got in as soon as we broke those little 2 top wicks. So that for me is 8:25 in the morning, about 12 minutes ago, 13 minutes ago, because this for me was a cheap long. Again, throwing it on with just 2 micro contracts. This thing ran up, I was up $100, and I was trying to sync the live stream and everything else. I hate doing all that shit at once. But as soon as we took out those 2 little candles, it's a very cheap long bounce for me, especially on 2 micros, because I've got my low of day already. It's 19,339, right? Whether that remains the low of day today, I have no idea. But when I'm getting in, I'm looking at 376. So ultimately, between, let's call it 340 and 375, I'm looking at a 35-point risk on a couple of micros. So if this was to take out the low of day, right, I'm going to lose what? $65, $75 a contract. I'll be down 150. Now I was already green on this account 300, so that would have taken me from a P&L of 300 to 150. Guess what happens? I stop trading. I don't do anything more, right? I don't do anything more on I don't do anything more as far as trading, because I'm not going to go from up 300 to now up 150 and then look for that next trade to get me back to 300. I just consider that $150 I lost, it's gone. But I'll go ahead and lock in that $150 day. So that's another thing too. As we start taking more trades and as you start going green, I always start managing my trades against my P&L. So if the first trade I took today on the 2 micros on one account was $150 or $120 or something like that, and then the other one was $300 because I took it on 1 mini. So now what I can do on that account that was up 300 is I've got a little bit of cushion to kind of play with. Again, mind you, I'm not thinking about apex drawdown. I was up 300. Now if I lose 150, I'm not thinking about that drawdown. I could care less about it, because I know that if I just keep managing my P&L, like that threshold, that high watermark, if I can just keep managing that, I'm always going to be trading near the top of my high watermark. That's how I look at it. So I'm never really gonna, run the risk of losing the account because I was up 3,000 in profit at one point in time and I ended up losing $3,000 in profit. That'd be stupid. But so again, every future trade is going to be managed against that P&L. So if I'm up 300, some wiggle room to kind of, take a couple more trades here, or one trade, or, depending on how they work out, against that P&L. Now, if the first trade started off and I was down 300, well then, I I'm still having a serious conversation with myself. Do I want to continue to trade this? Because on this particular account, I do have a little bit of a buffer above the threshold. So I've got some wiggle room to kind of play with here. But my personal daily loss limit on the accounts that I trade minis on is $500. So with $500 of a personal daily loss limit on accounts that I trade minis on, just one mini, I can either take that $300 loss if I was to start off with a $300 loss and tell myself, okay, let's just lock it in here. I'll trade the other accounts. Or I can potentially take another trade where I'm not going to take any more heat than a $200 max pain loss. That's how I do it on that. Now, if it was the other way around on the micro contracts, where let's say that first trade I lost $125, normally on accounts that I trade micros, I give myself about a $250 max pain daily loss limit, however that works out, whether that be it for one trade, if I love the trade and I'm risking $250 on that trade, or whether it be split up in two trades, risk $100 here, $100 there. So if that first trade started off red for me, then I know that technically I can take one more trade, but I can't take a trade that's going to assume more than around $120, $125 worth of risk. And if that trade so happens to lose, I've got to be done altogether. And that's where the hard part in trading comes, is because when you do lose that first trade and you decide that you still have wiggle room left to take another trade, let's say, for example, that second trade does not work, we've got to absolutely, I mean, whatever it takes, get up off the computer screen, unplug the whole computer altogether. So even if you wanted to take a trade, it's going to take you 2 or 3 minutes to get this thing rebooted. But you got to do something to get you off of the screens, because it's happened to me over many years that I've been trading. It's happened to me where I'll go down twice. I've hit that personal loss limit, whatever that is for me at that particular time based on my account balance, and I can't stop trading. And I want to trade at least one more to see if I can get something back, and it's normally the worst thing I can ever do for myself. So with prop firms, it's beneficial. We got a little bit of an advantage because guess what? Let's say, for example, we take one loss on one account. This is still continuing to bounce. So that big's bottom bounce, before I make that point, that big's bottom bounce that I'm looking at here, I was looking for the originals to come into like 420s, 430s. I was looking for it to at least retest the top of this big bar that we had here, this last low of day kind of, bar that we had. So I'm looking for it to come into this range here, because we had a little bit of support here. It bounced and then it flushed this whole little range here into that 20 SMA. But anyways, the benefit of having multiple prop firm accounts, whether they're evaluations, whether they're funded accounts, it doesn't really matter. You can kind of rotate, right? So let's say I take the first trade of the day. Let's say that first trade's a loser for $125. Great. I go over to the next account. Let's say that second setup, whatever setup it is, it happens to be, let's say that's a winner for $200. Great. We move over to the next one. And I just keep rotating accounts every single setup based on how many accounts I have. So if someone only has 2 accounts, then guess what? You're just going back and forth between 2. If you've got 10 accounts, or like yourself, you've got close to 20 accounts, well then, you got a little bit more wiggle room to work with. Now, sure, I wouldn't recommend looking for 20 different setups to take on 20 different accounts. At that point in time, if you're over 10 accounts, you can start grouping some of these together in a copy trader, 2, 3 accounts at a time. I believe you've started doing it. I've seen what you're doing. You're playing one with minis. You've got some on 5 micro contract size, and you've got some a little bit less than that. So that's perfect. I like that. That way you can kind of switch in between setups. You can switch in between accounts. You can kind of spread that risk around. So yeah, maybe every day you're not going to be positive on all accounts, right? I know everyone likes to see, their 10, 15, 20 accounts, the whole damn P&L to be green. But when it comes to taking payouts, and when it comes to these prop firms, what does it matter if we've got 5 or 6 accounts that were red on the day, $100 to $200, but we've got some other accounts that are green, $100 to $200, $300, right? Those accounts are just going to slowly keep working themselves into that realm of being able to take a payout. And it kind of diversifies your risk a lot, and it kind of controls those emotions, because God forbid we're trading 10 accounts all together at once. Again, we've seen it happen in our room this morning, and I don't even remember if you were one of the ones affected, but someone's copy trader was affected by some slippage. Was that you, or was that someone else that was affected by some slippage? They didn't, it didn't trigger on all the accounts or something like that, right? So anything, yeah, a couple of other guys. Yeah, exactly. Yeah, yeah, yeah. And that's just, that just comes with the game, right? So that's going to come with the business. You know, it's a copy trader. It's having to do a lot. Again, you got to also remember too, when we're trading these prop firms, we're on sim, right? So we're on the bottom of the barrel, right? Like the platforms, the connections, the data feeds, and all that, they could give a rat's ass about what's going on over here. Someone who's trading, let's call it a paper account, right? At the end of the day. So you're going to have some slippages. You're going to have some data feed issues. You're going to have some problems with, you know, sometimes the copy trader doesn't get out of all the accounts at the same spot. Sometimes there's an account that got an order reversed. It is what it is. You know, always double check manually when you do get that price target filled. If you've got a bracket order or ATM strategy, something in there, always double check to make sure all accounts are just cleaned up, and then you can do it manually. But again, it just comes with the business. And again, the more accounts you copy trade, the bigger the problems that you can have. Again, I'm not against copy traders. I just know that, again, because every trader needs to figure out what's best for them. I know that what's best for me is to not copy trade, because I personally, I don't care how long I've been doing this business for. I could be doing this business for 50 years. Whatever it is, however my brain is made up, I can't stomach the fact that if I'm on a copy trader of 5, 10 accounts and I go down 300 and it's on all accounts, it's too much emotion for me to not want to battle them all back. To not want to battle them all back. So, and that can be a big problem, because it can take a, you know, what should just be a $300 loss on one account, it could take that into a potential, you know, $1,000 loss on all my accounts. And then now I'm just back repeating the cycle. So again, on this Big's bottom that we've got here, we are kind of in this range that I was looking at. I was looking at the range between 420s and around 430s, mid 430s, if we can get up in that area. Obviously, ultimate measured potential on this bounce would be into 450. If anyone is long, and maybe you threw on a micro, you threw on two, maybe hell, you just jumped in on momentum here, be cautious and take your profits. This is a see green, take green market. The last thing we want to be doing right now is expecting that we're going to get a move all the way back up to the upside and that you caught the perfect bottom. It's not about that. Leave the ego at the door, get your money, move it along, lock out your accounts, come back tomorrow, do whatever you got to do, or move on to another account. So with that being said, we've got some people that have locked in some good green days today. Julie locked in 350 on hers. I see Nisha locked in, I believe it's a little over 300 on her XFA. That's nice. Felix has been slowly grinding. I like what Felix is doing, because it's realistic, right? If we kind of go back and you look at Felix's P&Ls, they're not flashy by any means. You know, $40 here, $100 here, $50 here. But it's very consistent. He's kind of looking for that 1 or 2 trades a day on one micro, and you know, if it works, it works. It doesn't, it doesn't. Sean was the one who had some issues on the copy trader, I see. Husky did good there on 287.60, hell of a day. And Burke's obviously a goddamn madman there. $800 on all his PA accounts. The guy's an animal. But yeah, looks like we're having a good day here. Again, getting closer here into those 30s. If anyone is long, or you're holding something off this bounce here, off this low of day, you know, continue to inch that stop loss up, right? One of the hardest things to do and again, I'll make this point, and I think everyone could kind of agree. One of the hardest things to do in trading is hold a winner. And it seems like one of the easiest things to do is hold a loser when it's going against you, right? So force yourself, if you're really in this, if you're really in this trade here and you are long by any shot, right? Again, you know, force yourself to hold it, right? We're really looking for, you know, 430s, 435, and then ultimately 450, right? But you want to protect yourself. You don't want to be a dummy, and you don't want to just say, you know, well, I'm expecting this, and if it doesn't go, then what now, right? Just keep inching that stop loss up. And what I like to do, if I'm trailing a runner, especially on micros, I do it a lot in options, I like to trail that stop loss up below the previous candle's low wick. So if you were in, like, for example, I took my entry at around the 376s, 380 maybe, you know, the low of day was my max pain stop. As that starts to push up, you know, I just keep kind of keeping the stop loss there until I get a candle that puts in a new high. Now, once that candle put in a new high for me, I just took my gains. I should have fucking held the thing, but you know, I didn't really have intentions to hold a runner. So what do I think about weighted moving average 14? I don't use it. I don't know anything about it. I mean, I'm sure it's good. It's just another area of supply and demand. But anyways, so having a little bit of trouble here. If I was to bring up the big chart, right, again, it gets confusing for people, but let me bring it up. So even on the big chart here, right, even on the big chart here, we've got open skies to 450s, right? Now, whether it gets there or not is the hard part, but that's our potential, right? 450s, 440s, 450s. That's the potential on this type of play. Now, if one was having a chart set up like mine, and I'll kind of go back to you, Charlie, you can kind of look at it. If you look at this chart, you know, what triggered me to get into this Big's bottom? Well, when we put in this, we had this big drastic red candle, and then we had the following candle kind of what I would say fizzle out a little bit. And then the candle next to that starts to go green. Well, now what I'm going to do is I drop this price level line down here. I'm marking out, this is my low of day. I'm looking at this 5 SMA, right? It's the green line on my chart. So I tell myself, if we get a candle that starts to take out these two high wicks on these candles that are not really, they're kind of fizzling out, and we start punching up towards the 5 SMA and get over that, I've got space between 80, right, which was the 5 SMA at that time, over 80 into at least 400. Okay, so that's around 20 points. Now, because I took profits on this candle, you know, I don't think it takes a rocket scientist to see, well, why did I take profits here? Because for me, I'm a see green, take green type of guy. So if I have room between 80 and I got room to 400, right, which is my next supply zone, this is 10-day moving average. For me, I've got to take profits. Now, there's those traders who like to squeeze the plays, right? You like to let them work. Nothing wrong with that. I think you guys have a lot more, you know what, than I do, which is fine. You have your original risk here. You can definitely move your stop loss up into like a break even or just shy of break even territory. Now it becomes a risk off trade. And you tell yourself this: if we get over the 10-day moving average, well, I'm going to continue to hold as long as we don't close below that 5, right? Because if the 5 was one of the first indicators or reasons why I wanted to get in this trade, because we're looking at potentially a short-term reversal here, then as long as we don't close below this 5-day moving average or hit my stop loss back down here at, you know, around break even, I'm going to hold this trade. And if it clears out the 10-day moving average supply, then maybe, right? Again, everything's a maybe, nothing's ever for sure. Maybe it gets up in here to these 450s. And that's what you would ultimately be holding for. So again, if you kind of look at the price action, we kind of just keep touching this 5, bouncing, touching this 5, bouncing, touching this 5, bouncing. So this is a little bit of a power trend that we're developing for over the past 5, 10, 15, 20, 25, 30, 35 minutes. Now, if we close below this 5-day moving average, What am I telling myself here? I'm not making this any more difficult. If I close below this 5-day moving average, then maybe I have support here at 387, which is the 10-day. That can be a stop loss. That can be a break even for you if you're holding along. That can be where you cut your runner. And obviously, anything below this 10-day moving average, well, I've got no support until low of day, right? So I don't want to be long, still holding, hoping if this is under 10-day moving average. That's kind of how I read this big chart and just let it do its thing. But, you know, if someone was to ask me, you know, what do I think about the chart macro? What do I think we're going to do? I mean, if you look at the chart, look how disgusting this looks to the upside, right? If we really start to continue to push, I mean, we've got some room over 460 into like 500. But I would say ultimately after around 500, 520, it's just, it's complete madness. I mean, there's so much supply. There's like, again, replace the word supply, replace the word resistance with sellers, right? Maybe it's easier to comprehend. So if I look at every single one of these lines as sellers or pockets, right, where there's potential selling going on, if I'm long, I want to sell into people who are selling, right? If we get over and we clear up all the sellers, imagine this. Imagine if on this push up here, we're pushing into these sellers, okay? Which is the 20-day moving average here in this linear regression. We're pushing into the sellers. So if I have something to sell, which is my long position, I want to sell it to these guys who are looking to buy at around this price, okay? Now, let's say there's 1,000 seller or 1,000 buyers at this area, right? 1,000 buyers. If I have enough friends that have enough items to sell, and all of these buyers buy, we give them everything that they're looking for, but we still have more items to sell. Well, guess what price is going to try to do? It's going to try to gravitate towards the next area of buyers, okay? So that's how I treat the chart, and that's how I look at it. And for me, I'm a dummy. It makes a lot more sense when I look at it that way, which is why on my long position that I just took when I immediately started this video and I tried to get everything going, when I was long here, well, if I'm have something to sell, which is my long position, my 2 baby micro contracts, if we get over this 5-day moving average, where are my next buyers at? My next buyers were here at the 10, so I wanted to sell into those guys at the 10. Now again, a lot of times, you know, I sell way too early because I'm selling to the first initial wave of buyers, you know, and typically we go higher, but it works for me, keeps my win rate okay, and it keeps my mind sane. Again, that's the key. If I can't have a clear mind and I'm constantly stressed about, oh shit, well, I could have sold here and now I'm holding and it's back to break even and I gotta wait a little bit, I get all out of whack, right? I just get all out of whack. You know, I don't know about you guys, but I will get all out of whack. Doesn't really work. Neki took 68 bucks off the Q run, so he's inching his way back to green from his first trade of the day. Neki's trading options over there though. And look at how close we came, guys, to this moving average here. Look how close we are. But again, also remember, because moving averages are going to move with the price, remember what I said about that price target being in the 50s. Guess what? Over the past 10 minutes, that has changed. Why has that changed? Because price action hasn't pushed up in a fast manner, and it's allowed this 20-day moving average to push down. So that number from 50 actually moved into 40s, and it's right here. So if anyone is long and you're riding this power trend, sell into these buyers. You sell into those buyers, okay? If you're stubborn and you want a little bit more and you're telling yourself, well, I want to see if this train, this tugboat's going to continue to the next, you know, to the next town, then we're going to look for 58, 59. That's what you would be looking for. I hope that analogy kind of makes sense as far as what I'm looking at here as far as on the big chart is as far as all the moving averages, the supply, the demand, support, resistance. It's all the same shit. Buyers, sellers, it's all the same stuff. It's just a different way to dress it up, right? And that's all price action is. When people talk about playing or trading price action, reading price action, all you're doing is reading the momentum of the market and what it's doing. You're getting in tune with what the market is doing because you're staring at these candlesticks and you're finding areas of prior resistance, prior support. You know, you're finding these, whatever you want to call them, liquidity pockets. You're finding, you know, these block orders or whatever the fuck people are talking about now. All these new fancy terms are just different words for supply and demand. It's just different terms for buyers and sellers. That's all this is. This is an open marketplace between buyers and sellers. If you're a buyer, where are you going to find the sellers so you can sell into them? If you're a seller, where are you going to find these buyers at where you can sell into those buyers, right? It's all it is. That's all it is. And depending on the time frame that you're trading is going to depend on where those buyers and sellers are sitting, right? Now, obviously, the higher the time frame, think about it like this. Use this as an analogy. The bigger the time frame, the 1 hour, the 4 hour, the daily. Let's say we've got 100,000 buyers and sellers at these levels, at these key zones on the daily chart. I'm just using fictitious numbers. Let's say on the 4 hour, we've got 50,000 at any given time, buyers and sellers at these particular levels. On the 1 hour chart, we've got, let's say, 20,000 buyers and sellers at these particular level. You know, the 5 minute chart, what I used, let's say maybe we've got only a couple thousand buyers and sellers at these levels at any particular point, right? So your bigger time frame levels are always going to be more of a magnet. They're always going to have more buyers and sellers at those levels, which is why when you see us break down through a previous day low, we've got no buyers for X amount of space, why it gravitates so fast, right? Versus when you're on these smaller time frames, it kind of, you know, it trickles up a little bit and it comes back down because there's not a lot of buyers and sellers there, right, on these smaller time frames. So it's up to you to really find those pockets where you can, you know, get in, take your quick cash and get the hell out, right? Unless you're a trader who is using, let's say, a 1 hour, 4 hour, or daily supply and demand levels, and you're going to sit through all the small bullshit on the smaller time frames to get to those bigger pockets. Makes sense? But you can't, like for example, I can't look at this 5 minute chart and tell you that, hey, this is a good spot to sell here because we're going to come from 19,437 and we're going to go down to 19,200. I can't tell you that because what I'm looking at here is just a little bit of sellers here, a little bit of buyers here, and I've got a little bit of buyers down here at the low of day. Okay. But if I was looking at let's say this was a daily chart and there was a big level down here at low of day where below 19,339, I don't have any more buyers until 19,250. Well, then I can then play the smaller time frame chart and hold it because I'm playing those bigger levels. Hope that makes sense. I feel like a lot of times traders will find these trades like, you know, like this little bounce, and they'll think that they found the best spot to just hold this because we're going all the way back up to high of day. And it's like, what time frame are you using to play that off of? And are you going to be willing to sit through a lot of the, you know, a lot of the trade action that goes in between that? Right into that 20-day moving average on a 5 minute time frame got rejected. So from the bounce off the lows, we cleaned up these buyers, we cleaned up these buyers, and we've cleaned up these buyers. But we still have sellers in this area. So everyone took our inventory, everyone took our product, right? Everyone took our product here at the 5 day, here at the 10 day, and we started to sell product at the 20-day moving average, but there's still some more sellers in this area. So when we reference that 20 SMA play, this, that, and the other, all I'm looking at is if price action gets over, like if we clean up, let's say it's a long trade, if we clean up all the buyers at the 20 SMA and we still have more things to sell, and that confirms on the next candle, where is the next area of buyers where I can sell into? Now it's got to have space, right? If I've got a 20-day moving average, and let's say there's a 200-day moving average 5 points above it, well, I'm probably going to ignore that 20 SMA play, because there's more sellers there than I've got inventory. Make sense? So I don't really want to be involved in that trade. I want to be involved in trades that got space. For example, if we look at the first trade of the day, which is still going to piss me off, Charlie, that first 20 SMA trade of the day, it was a 47-point range candle, right? I got into it. I was playing micros on that damn thing, but I stood through that 35, 30, 40 point freaking drawdown, right? I was down 250. But we've got so many sellers, right? Look at my, oh shit, I'm not on the right chart. Look at my chart here. Look at this crap. You can't even see through this stuff. There's so many sellers up here, right? So as we're popping up, we popped right back into that 20-day moving average. And then over that, we had the 200, we had a 50, we had a 100, we had all this crap. So I'm looking at it like, yeah, I'm down 40 points. I get it. But again, I'm never going to take a trade right off the bell with being oversized on mini contracts, because this kind of crap happens, right? Especially in this market right now. We're getting these flashes up and down. But I still had supply here, aka sellers, right? Got rejected, came back down, next candle flushed, I was able to take my profits, right? Boom. And I if you look at it, once we confirm and we get below this linear regression, we get through these buyers here, which is demand, or this is support. If you punch through them, there was nothing. There was absolutely nothing until 19,462. I should have told myself, just hold this damn thing, right? Because look we came up and tested the 20-day moving average twice. Would have put us right back to break even. So what, right? Break even, nothing. Got rejected, and then boy, did this thing flush. I do not believe the $85 activation fee for Apex is still going on, unless you did buy accounts when the activation fee, when they had that sale. So if, let's say you bought 5 accounts when it was 80% off, 1 day to pass, an $85 activation fee, I believe that still holds. But again, I'm not sure. I don't know 100%. It might be still intact. But I looked yesterday after Apex's sale was over, and they didn't even start a new sale. Did anyone check Apex? Are they even running a new sale? Or are they actually going to try to get full pop for their evaluations? That's not going to be good for them. Nobody's going to buy those things for 170 bucks. Look at Julie, got another trade. Julie's up 300. Another account, nice work. So do you guys kind of see, right? Those of you guys who are watching in my room, do you guys kind of see, and you guys can just put it in the chat, but do you see like the theory, right? The thought process behind these moving averages? I mean, look at how we're selling off, not selling off in a crazy way, but like look at how price is being pinned underneath this 20-day moving average. Again, remember, moving averages are not concrete brick walls, right? So price is going to go up to them, touch them, flirt with them, go over, go under, but it's not closing. It's not closing over that 20-day moving average. So look at it like that. Go back to that story I was talking about. If we're not closing over that 20-day moving average, or any moving average for that particular sense, if we're not closing over, that means that there's still more sellers there, and we don't have enough people selling crap, right? And even when we do sometimes close over the 20 SMA or any one of these other moving averages, price can still get rejected. You know, I just think about it as we ran out of things to unload, right? The demand was high, we got through it, but we just didn't have anything else to really sell. But I mean, you can once you start to incorporate a lot of these supply and demand zones, you can kind of use them to your advantage, right? Which is why I've sat back over the years. I've been making videos on YouTube. I've really sat back and laughed at people who are like, you know, when they tried to knock the chart, and it's like, yeah, there's a lot of stuff here. So what is that telling me? I mean, I've got to have space in between to even take a trade. This is kind of sometimes, a lot of the times, is limiting me from taking trades if I don't have room, right? If I don't have space, I can't take the trade, which works exceptionally well when I'm trading options, because I'll give you guys an example. If this is like a Tesla chart or something, or a Nvidia chart, and let's say we're in this top range up here, right? And we're pushing up higher and it looks like a good setup. I'll just giving a stupid example, but I only have space from here to here and then here to here. That's not enough room for me to get in on the options contract, allow the premium to move, because God forbid it comes up to here and then comes right back down. Guess what? I'm going to be at a big loss. So what I'm really looking for is space. I need gaps. Like, truth be told, if this was an options chart, I can't take anything long until bulls take care of 19,455. We've got to get over 19,455. That has room, potentially, again, everything's just potential, that has potential to 19,505. That's 50 points. If I'm a trader who's looking to take 5, 10, 15, 20 points, and I have potential of 50 points room, then I can tell myself there might be a stab between here and here, between here and here. Because look at, there's nothing there that should hold me back. Now, again, it doesn't have to. Nothing's perfect, but there should be room there to catch 5, 10, 15 points, right? Should be, again. So when you get down into ranges that, you know, that were happening down here when I was in the trade, well, sure, if we clear out the 5, I've only got room to here, right? And even look at what happened when we did come into this 10-day moving average. The next candle pulled right back down. So you can use it to, like, as confluence. I'm in long, I need to be trying to sell profits here. Hold a runner, sell profits here. Hold a runner, sell profits here. If it doesn't get here, where's my stop? Okay, close below the 5-day moving average. Simple. You should have been out on your longs on the last 5-minute candle. So anyone who was long, I don't care where you got long, you should have been out on the last 5-minute candle. Whether that was for a win on your runner, whether that was for break even, whether that was for a loss because you decided to buy into supply. And that's another thing too that people like to do. Market's pushing up, I missed the move, let me get in long. Next thing you know, you're buying right into all these sellers. Doesn't make any sense. We do not buy into supply. We do not short into demand. We have to clear out supply and then look for the next wave of people to come in and push that price higher. We do not sell into demand. We clean up demand and we wait for more sellers to push the price down. So hundreds of comments have always been left on my videos. What is confirmation? What is confirmation? Confirmation for me, and it could be interpreted different ways for other people because people use terminology different. Confirmation for me is if I'm looking at a 20 play, because that's what I talk about a lot on YouTube. If I'm looking for a 20 play, we need to clean up supply, because if the 20 is over us, it's supply. If the 20 was below us, it would be demand. But since we're talking about a long, I need to clean up supply at the 20 SMA. It's got to close over the 20 SMA. What's my confirmation? When more people take out the high of the previous candle that cleaned up supply. That's my confirmation. It's not letting one candle close over the 20 SMA, letting the following candle also close over that price, and then waiting for a third candle. What the hell? We already closed over the 20 SMA once. Great, we just cleaned up supply. Now what am I doing? Well, I'm looking around, I'm looking behind my shoulder, I'm waiting for more people to come through the doors with me. I don't want to be the first sap walking through the door and get my head taken off. I want to wait for more people to come through the doors with me. Make sense? If it doesn't happen, it doesn't happen. There's no trade. And if it does happen and we still get steamrolled, well, great. I better have an out, right? Whether that's X amount of points, whether that's using a moving average, whether that's a hard dollar amount, you know? And when a stop loss gets hit, whether it's a technical level, whether it's a hard dollar amount, whether it's a previous candle low, whatever your stop loss may choose to be, X amount of points, I don't care what you're using as a stop loss. When your stop loss gets hit and you're technically wrong on your idea, can you do me a favor and get the hell out of the trade? Get out of the trade. I would rather someone be down $300 than be a rock and be down $1,000 because you thought, or you were hoping, or you didn't want to lose. Drop the ego here, okay? None of us out here are going to be featured on the Wall Street Journal, okay? We're just not. None of us here are going to make, you know, $50 million, $100 million trading Apex or Top Step or My Funded Futures prop firms. It's just not going to happen, okay? I'm not going to win a Nobel fucking Peace Prize for what we're doing here. We're not doing brain surgery. We're not doing heart surgery. We're not doing anything. At the end of the day, we are very selfish people who are looking to make money by clicking a few buttons on the mouse. So don't make this more difficult than what it is, and don't think that you're that special, because we're not. That's the harsh reality, and a lot of times traders have a very big ego, which I believe in. Ego is great. You need to have confidence. You need to have a little bit of that chip on your shoulder. But you can't be arrogant. There's a difference between having an ego and being arrogant. Traders who are arrogant will revenge trade. Traders who are arrogant will hold positions when technically they need to be out of the position because they can't emotionally control themselves. Traders who are arrogant will hit their daily loss limit of $500 and tell themselves, well, if I take one more trade, maybe I can win half of it back. That's being arrogant. That's being an idiot. And I'm going to call an ace and a spade a spade. And I'll be the first one to tell everyone I have been arrogant and I have been an idiot many times, hundreds of times. I'm no better and I'm no different than anyone else. It still affects me. The bug will still bite you. You just learn to get a little bit better at managing it. That's it. Every year you spend in this business, every ounce of screen time that you put in, every trade that you take, you get a little bit better. So why is it, again, we're just still being rejected under the 20, now the 5, and the 10-day moving average? I don't really see anything here. Low of day would be ultimate potential if this continues to flush. Obviously, anything below the low of day could wipe out a little bit more. It is what it is. But I'd be looking for here to see if we put in a higher low and then see it consolidate and see if it pushes back up towards the 20 as the 20 starts to decline more. But, you know, all in all, that's really what you're looking to do. You know, you're looking to stay in the business. You're looking for the next trade opportunity. You're worried about tomorrow. You're worried about next week. So many people are focused in what happened previously. What happened yesterday. Yesterday is gone. You know, whether you made $1,000 yesterday or you lost $1,000 yesterday, I'll tell you this. For one thing, nobody cares, right? No one cares. And two, the market doesn't even know what happened to you yesterday. So why are you still dwelling on what happened yesterday or the amazing week you had last week? I don't know how many times I've seen people make $3, $4, $5, $6,000 in a week, and that's all they're talking about. That's all they can think about. They think it's going to happen the next week. Guess what happens? They give it all back plus some. Yesterday is over with. Even when you get out of a trade, like the trade that I was in here, I took a measly $55, $60 on trade. I forgot about it already. It's out of my mind, out of sight, out of mind. Where's the next trade at? Where am I going to make some more money at? Is there an opportunity for me to make some more money? And I can give you guys a little bit of a look at Elder coming in $225.72. Elder's been also tearing it up too as well. He's been trading micros, I know that for a fact. And he's been doing really well. Very fucking consistent over there with Elder. You know, so I've got Shorty, I've got demand on a 1 hour chart at 280s. 280s could be a potential landing spot. And then 220. 280s, 220s, 207. 280s, 220s, 207. Those could be potential landing spots. Right now on a daily chart, this chart is broken down through this little bit of, you know, pop that we had here. We're resting at the 50 EMA. Anything below this, you know, if this was an options chart, I'd be licking my chops for a play tomorrow. Anything below today's lows would have room to 213, which from here is around 260 points. So if we confirm today's, like if we hold this area today, oh, I'd be all over a short through today's lows tomorrow. That's something that needs to be marked out on everyone's chart. Now, again, if we go down another 100 points today, that trade becomes kind of invalid. But sometimes I'm almost hoping that the buyers and the bulls can hold this price action here, because the better trade would be tomorrow. The better trade would be a gap up, a green open tomorrow, right? Green open tomorrow, something that shoots off the gates, or something that's up 150, 160, 100 points tomorrow, gets rejected within the first hour, then comes down and loses today's lows. That's a beautiful setup that will pay you quickly, and it'll pay you a lot. But again, this is not a perfect world. Curious, Shorty, what did you get on the 250s? Where are you finding that at? 250s is going to be what? We looking at the prior hour candle low? Got prior hour. I got prior hour around 340. Absolute fucking freight train though, huh? Sellers got the buyers on their knees right now. Four hour 100. Yeah, 212. I got 4 hour 100 at 212ish right now. Could have moved, could have adjusted. We got 1 hour, linear regression at 270s, high 270s, and then below that we've got like 220s. So yeah, I mean 250s can definitely get hit. I could see an overshoot of you know 280s into the 250s, and then an immediate snapback. That's definitely impossible. Especially when the Nasdaq likes to overshoot levels a lot, right? If you're trading like if you're trading the ES, trading the SPYs, or you're trading the Dow or something, they respect the levels a little bit more. But again, why do we like trading the Nasdaq? Because it moves fast, right? But it definitely overshoots levels a lot. Shaping up to put in a little bit of a higher low here as well. You know, if one doesn't have all this goop on the screens, you know what I would be looking for here is I would do another little mini demand there at 362. any rejection back up here in this zone, right? So any rejection here, change this color. Any rejection in, God, that's hurting my eyes. Any rejection there and a loss of 362, I could see testing low of day at 339. Yeah, could be a lot of positioning coming in before Nvidia earnings, right? Could be setting up. Which again, for Nvidia's case, I go back to the big chart and I look at Nvidia. Look at this Nvidia chart on a daily. We got a little flush. We got a little flush of yesterday's lows. We've got a 50-day moving average sitting right above it. Nvidia is still poised to pop, guys, and we could be looking at 138, 141. I've still got, I don't know anyone who was listening yesterday. I started a long yesterday, again, very small size. I've got 2 contracts that are going to expire Friday, and I've got 1 contract that's going to expire next Friday for 135s, all in for about 1600. Not expecting much. Be completely okay if it goes to 0. Would not be happy, but would be okay just because of the way that the daily chart is holding. Now, if we were trading well below the 50-day moving average, I wouldn't be in that. I wouldn't have started that trade. But I like the sweep of this whole bottom range, and I like how the buyers are holding it. We'll see. We'll see. I'll be honest. The only thing that got me into this Nvidia trade is not yesterday, the day before. There was about 3.5 million that came in on the options chain for 135 calls on the flow. That's it. Either somebody knows something or that's one huge gamble. But if they're willing to get smoked out 3.5 million, you know, what's my 1,500 bucks going to do, right? I have a feeling a lot of people in our room are done for the day. Numbers look good. We're still getting held right here at this 20. Nice. It happens. It happens. I would lock out that one up 900 though. Wouldn't trade it anymore. You got another account and you're still looking to trade that, or just be done altogether. Yeah, we're right in the middle, smack dab of lunchtime. So for me, between 9 a.m., 10 a.m., typically the worst time to trade. You might get that one trade. Again, for me, I always kind of see the same thing, right? I tend to try to avoid lunch, right? That hour. And then there's normally like one play that comes right after lunch, and then you get some more consolidation. And then if the market's going to move, it'll happen like the last hour and a half. But I don't like trading this time. Well, you can see volume is significantly lower. Volume is significantly lower in the past 30 minutes than it has been since the open. Significantly. So what is that going to tell you? Slower moves, even if something does confirm. Fake outs, even if something does confirm. If you insist on trading, maybe you should cut your position size in half, right? Maybe you should cut your take profit in half. You know, something. I'm not saying you can't trade during this hour. I'm just saying make an adjustment in this hour, so if it doesn't go your way, you're not gonna, you know, seek counseling after this. Higher low, putting in a pop here over 20 SMA. Now, what I would be looking at here is if this confirms, right? I've got to be cautious of this high, this prior swing high. So that prior swing high at 441, I've got to be cautious on. And depending when this candle stops, depending on that, if it confirms, right, we've got about a minute here, less than a minute, it's pushing right into this prior swing high. So if it confirms and it shoots up 3 or 4 points and comes back down, can we really be upset that it didn't work? We bought right into sellers, right into supply. So, but again, if it does confirm and it busts through this little prior swing high here, yeah, it's got more room, and we'd be looking, you know, for something a lot more significant to the upside on a continuation here. I'm gonna drop a fib and I'm gonna see what this is. From high to low. Yeah, see, we 463s would be a 38% retracement, and a 50% retracement would be at the 500s. And then that 61.8 is all the way up at 530s. 530. So back up in here in this area, which that takes us to, what the hell was that? This is the 30-minute opening range low. So a 61% retracement takes us back into the 30-minute opening range low. Again, I'll just reiterate, if you're green on the day and you're still going to continue to trade, make sure you manage your future trades against your P&L. If you're up 150, risk no more than 75. If you're up 200, risk no more than 100. If you're up 500, risk no more than 250. Do not, I repeat, do not give back all your cash. It'll be the worst thing that you can do psychologically for yourself. The worst thing you can do. The high price of this 20 SMA confirmation is 433.75, but 441.50 we have that prior swing high. I like it. Gives you more freedom. Good business for them because people are going to blow accounts like crazy. Good for you if you dollar cost average and you play ranges and you play zones. Gives you a little bit of that control, right? So it's going to give you the control to where a lot of times with Top Step, when you do hit when you in the past, when you hit your $1,000 daily loss limit, psychologically it breaks you because you're already halfway to blowing that account up. So you kind of just go into a mentality of fuck it, right? Like, I've only got $1,000 left. I need to get it back. Versus if you have the full $2,000 to play with on a day in, day out basis, maybe you can battle yourself back or have better judgment. But it is going to cause a lot of people to increase position size because they have more drawdown. It's going to cause more blowups. Just don't be the guy who is blowing up. I like it personally, especially when you're trying to pass evaluations. I guess on the funded stage, maybe when you get to that funded level or whatever, not so much. But in evaluations, yes, because I don't know how many times like Apex will run a sale. Apex will run a sale, and I'll grab a few of those accounts on the cheap, and I play them aggressively, right? I mean, I've it's no secret. I will trade evaluations extremely aggressive. I don't know how many times I've been in a trade where I'm down 1100, 1200, and then it comes back and it pays me $2,000 cash, right? Or it actually comes back and passes. Versus if I was on Top Step, I would have been stopped out on the day and no chance to even try to get that back. So I believe on the evaluation stages, it's going to help, right? It's going to definitely help you. But again, when you get to the funded stage, just disregard that because no one should ever have a $2,000 daily loss limit on funded. I wouldn't even risk more than $300 on a fresh funded until you get that balance up a little bit. Yeah, minis are hard. They're hard to control because I mean, 6, 7 points as it's chopping around, you're down 100, $150. Chops around 10 points, you're down $200. It's very hard to control. You got to be yes right on entry a lot of the times. Unless you have a cushion where you can let it wiggle, you know, $200-300 at a time. But the head game needs to be strong if you're trading minis, because you know there's been instances where I've gotten into a trade and it's down 400 in the blink of a fucking eye, right? And it's like I've got to really look at the chart in real time and tell myself, is this trade busted, or is the range just, is the volatility just high and I need to let it work a little bit, you know? I need to let it work a little bit. And if it doesn't work, what do you do when it doesn't work, right? You stop trading it. Do you have that much control to stop trading it? Because if you don't, that's where people tend to get hurt. And again, you guys can make really good money trading micros. You know, $200 a day, $150 a day, $300 a day. You know, 10 days you'll pass an evaluation. 12 days you'll pass an evaluation. A couple weeks, 2 or 3 weeks, you guys will be ready for a payout with a lot less stress. Time and time again, I've seen traders who trade mini contracts and they go up 400, 500, 1,000. They're at 1,500. They have one bad day. They give it half back. They come back in the next day and they blow the account. And they were on a 4 or 5 day run, right? But that's the thing with trading. You're going to have these runs. You're going to have these runs, and then the run is going to come to an end. And do you have enough drawdown and discipline to withstand the cold streak? 2 trades, 3 trades, 4 trades, right? If you don't, you're going to get hurt. Back up to this swing high here. We got 15 minutes before that new hour candle starts. Testing this prior swing high here. I'm going to answer a question that some people may be thinking. 20 play was entry of 19,433. We touched 19,437. That was 4 points. Okay. Anyone who got into that trade, you were up 4 points. So if you're trading one mini, you're up $80. And now it came all the way back down. Now you're red, right? I'm waiting for this prior swing high to get busted. So I'll give up the 4 or 5 points, hoping that when this breaks, it's got more steam to push through and give me an easy 5 to 10. That's one of those things where you kind of have to kind of, unless you're a hyper scalper, a micro scalper who's going to take, you know, 2, 3 mini contracts, take 2 or 3 points, you've got to start looking at the chart to the left. What's going on? You know, is it the best trade? And I believe I mentioned this earlier when I said that if it doesn't have space, can you take that trade? Yes. Is it an active setup? Yes. Did it confirm? Absolutely. But it went up 4 points. So even if you were only looking for 5, it didn't get hit, and now you're in drawdown. So make the decision of sizing yourself way down to where this little pullback is not going to affect your psychology, or don't take the trade until it breaks that prior supply. That's all you can do. Right? That's all you can do. Because the downside potential, if this stalls and it creates a little bit of this double top here, is a potential pullback to 19,400. The ATR right now on a 5-minute time frame is sitting at around 28 points. What I'd really like is it to hold right here into the top of the hour and then explode through. It's 12 minutes. And this is the kind of price action that drives me nuts. And this is the kind of price action that has got me into a habit of around this time, I'm done for the day. Regardless, I could care less, to be honest, if the market pushes down another 100 points or up another 100 points. Because it tends to get me in trouble. And why it will get me in trouble is because I feel like I've been sitting around for an hour. I haven't had that prime opportunity to take a trade. Maybe this trade works, maybe it doesn't. I'll just take the trade, and I wasn't really confident anyways. Like, again, I don't really like I'm not in love with the opening range, of candles being 40, 50 points, but I like the movement, the fast movement, where every 5-minute candle is either showing me something of, hey, there's an opportunity to bounce, there's an opportunity to flush here, versus here, it's kind of just like these last 20 minutes, we're looking at ranges of 17 points, 18 points, 10 points. There's not a lot going on there. That's it. There's the break. So if anyone took the break of 441, it immediately shot up to 448, right? That 441 and a half. Let's say even if you were late, 442. Okay. It went up to 448. So do the math, right? 448 from 442, how many points would you have made? Is it active still? Of course. Still pushing up, 449, 450. You got your 5 points. If you have that hard take profit, you should have taken profit. It is what it is. I didn't flip back to the stupid screen, but there it is. So what's the P&L looking like here? The P&L is looking like 375, 4 trades today, 100% win rate. That last trade, one second, guys, I gotta send this message out. That last trade, I had a hard take profit on just a few micros. Just a few micros. Again, 450 and a half is what we touched. So just to kind of give context here, active 20 SMA play was already in motion, right? It already had confirmed. So if you were in that trade, right? You sat through a little bit of heat, a little bit of drawdown. Again, how much drawdown? 433 down to 412. How many points is that? Or excuse me, that didn't confirm. 433 down to 419. So 13 points worth of heat. Still continuing to push higher here. 10 points was hit. 10 points was hit. If you guys took that break of that prior swing high, confirmation of that 20 SMA play, 5 points target hit, 10 points target hit, take your money, right? If you're looking for more than that, I hope you're sized down to where if it pulls back and goes to break even, confirm just means, again, it's not hard. So we closed over the 20 SMA. We got another candle to take out the high of that closure over the 20 SMA. That's all it is, confirm. What I was looking at here was I wanted to see price break 19,441.5. That was the prior swing high. So as soon as price broke 19,441.5, I went in. Okay. And we touched 454. So about 13 points, it pushed higher. I had a 5-point take profit, handful of micro contracts. So I manually get into all my trades. I'm old school about it. I like having the control of clicking buy when I want to click buy and sell when I want to click sell. But I manually enter my trades, but I have a hard take profit. So on TraderVate, again, it could be a personal TraderVate account. It could be a Top Step account. It doesn't really matter. Apex account. It doesn't really matter. I got the ATM strategy in there for, I got the ATM strategy in there to take profit at 10 points, or excuse me, 5 points. And sometimes I have it set at 10 points. It just depends on how I feel. But because I'm managing against my P&L today, which is 375 now, because I'm managing that, I'm not going to play minis. I'm not going to oversize. I'm not going to look for 10, 20, 15 points. I'm just looking to, like we call it in Evolution Traders, like we're just looking to stack and piece together a little bit more of a day. That's it. Stack and piece together a little bit more of a day. Curious to know if anyone was in the original 20 SMA play, or did anyone take a little break of 441? I've got to get going here, guys. I just want to see if anyone actually took that. Did anyone take the break of the prior swing high over 441, or was anyone sitting in that 20 SMA play? Because the 20 SMA play paid. It's as high as 462 now. The entry was over 433. You know, even if you waited for the 441 to get taken, we're up 20 points. Curious to know if anyone snagged that. And if you didn't, I understand, could be a little bit of, I don't want to trade in lunch. I don't want to, I don't want to I don't trust it. I get it, right? Trust when it comes to taking your setups is never going to be 100%, right? But you have to trust your strategy, right? Now, sure, are different times better to take trades? Yeah, probably, right? Are sometimes, maybe we should avoid trades? Yeah. But trading is nothing more than having a thought, having some analysis, and pushing risk to the middle of the table and managing that risk. So even if it's not, I don't care if it's not even the perfect setup out there. Even if it's not, just manage your fucking risk, right? Don't go, like, I'm not going to say to someone, you should have been in here 5 mini contracts. You would have made 20 points. That's stupid. That's foolish, right? I'm not even telling people that you could have caught all 20 plus points of this move. I got a 5-point take profit. About 80% of the time, I got a 10-point take profit. the other 20% of the time. I shuffle in between those based on how I'm doing on the day, what time of the day is it, and so forth and so forth. I manage my risk on like a technical per dollar basis, point basis, right? So to start the day, I always have a dollar amount in my head that I don't want to lose any more than. And then depending on if I win or lose, those first 1 or 2 trades of the day will depend on if I'm going to continue to trade or not. If I have taken a few trades, like, which again, what was it, 4 trades today? 4 trades today. Yeah, 4 trades today. Again, some of these last trades that I took, guys, they're not for much. $15 here, $25 there, $54 there. That kind of shit adds up. That kind of stuff adds up. 3 trades on the micro side of things. I want to put something into context for you. 3 trades that happened later in the day where volume is a little bit slower and it's a little bit more choppy. 3 trades, one of them was for around $55, the other one was for around $25, and the other one was for close to $20. So 20, 40 plus 50, that's $90 on 3 trades, trading micros. The other one was the big trade where I started off trading a mini contract and was made $300 on the play. That was early in the day. With that being said, guys, I'm going to wrap it up here. I got some things to do. Wish you guys all the best of luck, and I'll catch you guys all next time.